SMC or trendline? That's the debate that goes on in the internet, right? Now, if you go to the internet, most people do like bashing trendline. Why? Because trendline is the traditional way or traditional type of strategy that was used in the forex market, right? Now, when SMC came, ICT came, demand and supply came, people started bashing trendline. But to me, all is still gold, right? Now, for me, the best market to trade usually is the trending market, not a consolidating market, right? Now, into this video, I want us to talk about SMC and see whether we can combine SMC and trendline. So let's get started. Now, this is an amazing trade. This is gold trade. I'm not going to talk about this trade because this was analysis that I did and gave you free in the YouTube platform or YouTube space, right? So if you watch that video, I bet you're catching this move. So basically right now I'm up over 3,000 points. We will talk about that gold trade later, right? Let it just run. So for now, I think I should just see maybe click on any random pair and see if we can combine SMC and trendline, right? So let's just talk about NASA 100 or even US 30. Let's hit US 30 real quick, then hit the daily time frame. Correct. Now, for those who trade SMC, you understand that for you to look for your buys or even your sell position, you wait for the market or price go back to your liquidity zone or even fill up a fair value gap, you know, guys, those terms, right? Then look for your entry properties, which is still okay, right? But my question is, if you ignore trendline, what if we are in a trending market, right? Because I understand that most of the time those who trade ICT, SMC, you know, demand and supply, mostly do trade a ranging market. You never, if you never notice, then I don't know what you're doing. Mostly do trade ranging market. Why? Because if you want to trade SMC, ICT in a trending market in a wrong way or even demand and supply, then I bet you'll keep on burning, right? So this is what I mean. For instance, if we mark out this level right here, something like this, and then you say, oh, we had this level right here. So most people who trade demand and supply or even ICT or SMC will be waiting for price to grab this liquidity, how you call it, then now look for sales. Remember, we're still in the daily time frame. Now, if we go to the, let's just say, because I know most people do go to the 15 minutes, 5 minutes and start looking for the entries based on that. So yeah, they've identified the last highs and lows of the day. So this is it. So I believe people will be looking for their sell position right here. Those who trade what I'm talking about, the SMC, ICT, demand and supply, right? They should be looking for their entry right there. Because why? If you look at this, anytime the market hits this level, bounces off. Once it hits this support level, bounces off, goes back for a retest on that resistance. Then now over here, if we try to zoom, I think I can see a double top right there, right here. So you should be looking for your selling position, targeting this previous demand zone, sorry, or a support zone, right? But then you see what the price or what the market did, takes you out. So what's the problem? Ignore that trend line, right? So let's just combine ICT, or I mean SMC under trend line, and let me show you how you can, you know, profit from that, right? So if you take it back to the daily once again right here, so the first thing you need to do, just look for those amazing touches, 1 2 3. I like saying 1 2 3, right? Look for those touches, 1 2 3. Now on the third touch, that is where you start looking for your entries, right? So first analysis is identify the trend. Let's just forget about ICT, SMC, demand and supply first. We should incorporate those ones when looking for entries only, not looking for trend. Understand, right? When looking for your direction, use trendline. But then when you want to look for your entries, now incorporate the SMC thing. I hope you guys get that, right? So this is it. We have our touch 1 2 right there. Good. Now this is it. If I'm using trendline and then anytime the market touches our third touch on that trendline, I should be looking for buy or sell. But then I'm forgetting to use SMC or even demand and supply, I'm also going to burn, right? So that's why we need to combine everything. Now this is why I keep on saying, for you to be good in forex market, you need to be good in interpreting the market. You need to be good in like all kind of strategy, right? So let's go. Now if you look at this based on the daily, we still had bears coming in right here. The bears came in, boom. Now I'm going to give you a very secret and you guys should be keen, correct? Now this is it. If you want to look for entries once the market has touched your support or a resistance trend line, we're not talking about supply and demand yet. Trend line, right? Once price has touched that level, look to the left. Look to the left and see whether you can see or you can identify a supply zone or a resistance zone, right? Then I'll mark out that level right here. Now if you look to the left, we had this level right here. Mark out that level right there, correct? And then at the same time, you mark out, still on the left, mark out the resistance of that day or the previous day, which was this zone right here. Now why do we mark out that level? Because why? Sometimes price won't go back to that resistance or support zone of yours. It might reverse from that previous high or that previous low. I don't know if you guys are getting me, right? Now once price hits that key level that you're anticipating, still wait, then wait for an impulse phase, right? Wait for the market to give you an impulse phase, whether you was looking for buy or selling position, right? Now if we zoom in right here, remember we're still at the daily time frame. Right here we had price giving us an impulse phase right there. Now the moment you see price giving you an impulse phase, don't do a thing. Mark out that level that price did take off from, right? Mark it. Let's just have this adjusted right here. So this is where the market took off from right there. Mark that level right there. Then guess what? Don't do a thing. Let it go, right? Now previously when I was starting forex trading, I was trading candlestick. Once I see the candlestick engulfing the previous Marubozu candle, I'm still using Marubozu candlestick, but in a right way. But by back then I never used it in the right way, right? So once I see, we've had the market moving up, now let me take that buy or let me take that sell if the market was dropping, right? Then all of a sudden the market started reversing on, right? So this is what I came up with. Once you see price has touched those amazing zones that you anticipated, let it go fast. Don't be in a rush to take that trade. Let it go. Why? Because we understand after every impulse phase, price has to give us a correction no matter what. It has. There's no way price will just continue going up, right? Once you see price giving you an impulse phase, always wait for correction, right? Now, the moment you see price starts correcting, then now mark out that level that price has started correcting from as a new high. This is it. Remember, we're still off the daily time frame. Mark this as a high right there. Now this is when we also need to now include our SMC thing. Now from then, let's go to the H4 and understand. Now the thing is, we understand, right? Understand how price is going to react or approach that previous low that it took off from, right? So mark out, we did mark out that level. This is it, where price took off from. Remember, we're still at the H4 right here, correct? Mark out that, and now understand how price is going to approach that level. Now for me, I do add trend line. We had this right here. We also do the same right here. Now if you see what US30 did, went back, took out this liquidity. Here we go. Those who know what I'm talking about, liquidity. Then I went back, touched that level right there, previous demand zone, correct? Now that is when, if you like, you can go to the 1 minute time frame, which I don't advise you if you don't understand anything about 1 minute, because it should be risky. If you want to get those amazing sniper entry, go to the 1 minute time frame and wait for, just repeat the same thing, right? Go to the 1 minute, wait for price to create a new high, give you an impulse phase, then wait for a pullback, then now look for your entry. That's it. I don't want to dig deep into my entries because that is my secret. Like I told you guys before, the last time I kept on giving you my entry secrets, the algorithm changed, right? So these guys know better now. If we keep on giving too much information on the internet, they do change the algorithm. Now once they change the algorithm, I'm going to suffer too, because I'll be like, yo, I did backtest this strategy, but why does this strategy not work anymore? Because the algorithm changed. Now if it changes, I also need to evolve, right? So what I came up with, I'm not going to show once again in the internet, right? Stays with me. I'm not I'm not going, like I said, I'm not going to show everything in the internet, but then these are just basic things, right? Look for, now once you've analyzed the market just like we did, simple way, now that is where you look for your SMC, because right now you understand the direction, you understand price has touched those amazing key level, right? Then that is when you look for your buys or even your sell, right? Now if you don't understand what we're talking about, rewind the video and check out my Telegram link in the description box below. And adios, amigos, peace.